which meant that we had a very busy February and very busy March, culminating in multiple offer situations in many parts of the country, namely in Alberta. We were seeing this on our team, and we were also seeing multiple offer situations throughout most of BC.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
Can you believe it? We are already 6 months complete of 2024. And for some people, it probably feels like it's been 2 years in one. And for others, it's been 1 year in 2 years. It's been crazy in the real estate market and the lending market. And, 6 months through the year, I thought it'd be a great idea to do a little bit of a digest on what's happened specifically, some of the highlights, and what to expect looking forward into the second half of 2024. Now, there's just been so much that's happened in the first half of the year that I'm not even sure how we can even keep up to the reality of that first half, but there's so much yet to unfold and so much uncertainty in the marketplace that I think there's just going to be a lot to cover today. But today's going to be a little bit of a micro episode. We're going to keep this tight and focused and summarize what you need to know from the first half of the year so that you can plan towards the second half, or you just generally are curious about what's gone on in the marketplace so far year to date. So a quick little summary of what we want to talk about, or what I want to talk about here today, is just honestly the way the market has unfolded, the way the real estate market has unfolded compared to what some of the analysis and predictions were going into the year 2024. Now, before I get into all this, if you're enjoying this show, if you're enjoying the podcast, whether you're watching on YouTube or the podcast, I ask you one favor: do me this solid, click that like button or subscribe button and share it out to somebody else if you think there's value behind the information in these episodes. Or if you'd like, send me a little comment. Let me know what you like or don't like so I can continue to get better for you guys, because this show is for y'all. Now, my primary focus is on real estate, but it is also on money and wealth. And so let's talk a little bit about how the real estate market has impacted people throughout 2024, starting with the interest rate changes. Now, as everybody knows, the BOC has basically dictated, the Bank of Canada has basically dictated the success or the failure as far as real estate values in our marketplace and families across the entire country of Canada throughout the first half of 2024. When we entered the year, not only were the bond markets on a slide in anticipation of lower rates starting as early as March of 2024, but there was a lot of optimism entering the marketplace, thinking that the real estate market as a whole was about to recover and we were about to see a rate drops happen left, right, and center. And as you know, the story unfolded a little bit differently, because with our first couple of rate drops, we were held with some not necessarily negative data, but definitely not positive data in the first few rate announcements of 2024. Which led to the market pushing out the potential of rate drops even further. Now, if you can recall, that was in the first quarter of 2024, in the January, and then the March rate cuts, which at that time pushed us out much farther. And we were suggesting that we may not see rate drops, or I should say the market was suggesting we weren't about to see rate drops until March, and in some cases, June and July of 2024. Now, it turns out that those people that were waiting for the rate drops had to wait a little bit longer, as we know, as the first quarter point drop happened in June of 2025 on the backs of some negative data. Well, basically most of the negative data supposing that we were basically on the cusp of entering some form of a recession. But I've gone too far ahead already and just want to rewind back to the beginning of 2024, because a lot of people are missing out on one key consideration. In the fall of 2023, the market had bond yields at the highest that we'd seen in over 5 years, which means that we were seeing fixed rates, specifically the 3-year fixed, in the mid 6% range. Well, come January 2024, amid all the positivity of the marketplace, we were seeing the bond yields drop significantly, in fact, almost 75 to 1% over the course of 30 days. Which was still hit a bottom that was lower than we've seen since then, which ultimately had a massive and immediate impact on fixed rates, dropping them nearly 1% over the course of 30 days. Now, between that and the fact that there was not a significant increase in the actual amount of listings in the marketplace, we saw a rush to the market. January, on my team, we saw more than 25% higher amount of inquiries than we would typically see at this time of year, which for us is a pretty significant number. And ultimately, that transpired in a lot of people curious about getting into the marketplace, looking at pre-approvals and so forth, which meant that we had a very busy February and very busy March. And we saw that culminating in multiple offer situations in many parts of the country, namely, specifically in Alberta. We were seeing this on our team, and we were also seeing multiple offer situations throughout most of BC. Most of my business is in BC and Alberta, so that's where most of our information is. Now, I think that Ontario had a little bit of a different approach, even though their market was heating up and they were seeing more in different types of segments. But because property values were still priced based on those higher interest rates, and we saw the homeowners start to reduce them, we did see a little bit of a multiple offer situation. Now, unsurprisingly, since that time, we've seen a lot of people jump back into the marketplace for listings, and we've seen a significant amount of listings grow in basically all markets across the country, more so than before. So we went from 2023, where nobody wanted to sell their property, to 2024, where it was still very minimal people, but there was excitement and anticipation because fixed rates were coming down, and we thought that variable rates would come down right away. And then, of course, all of a sudden, April hits, there's no Bank of Canada rate drop, and everybody starts to jump into the market to list their property, including all of those people who bought properties in 2022 for investments that were underwater. This all together, along with many buyers waiting on the sidelines for potentials of rate cuts, completely shifted the market and put us in a situation where it was the opposite of before, where we now have substantial amount of listings. I wouldn't say too many, because it's not that there's too many listings, it's just that the buyers are still waiting. So we had a substantial amount of listings, and there was a glut of them, and there still are in many situations in certain market segments, and really not enough active buyers. Like at one point in April and early May, we had the highest amount of pre-approvals we've ever had on record for people who were pre-approved and shopping, but not pulling the trigger on purchasing real estate, because most of them, based on the feedback they were giving us, were waiting for interest rates to potentially come back down. Now, since that time, obviously the BOC has reduced interest rates, and many were yelling and screaming and saying, okay, now all the buyers are going to come back to the marketplace. But I think most people forget one thing. When the Bank of Canada reduced interest rates 0.25%, that had no impact on people's ability to qualify. It had no impact on the lowest interest rate. Now, not immediately, at least. And ultimately, that's what people are objectively waiting for, is for their ability to qualify for more and the payments to go down. And so enter June, we see a substantial amount of listings, more listings than buyers. It's still considered historically a balanced market, but we're not used to it after the last couple of years. And we see a substantial amount of listings sitting and waiting, because a lot of the buyers are still waiting for rate drops, even more so. Now, circle back to January. We talked about the bond yields being the lowest that we'd seen in for at least a year and a half. And fixed rates started to follow. Well, after that negative news of the first couple of rate cuts not coming in, and the data not looking like what we were hoping for it to look for, or at least what the BOC was hoping for, the bond yields jumped up again. And we were starting to see fixed interest rates, especially around the 3-year terms, jump back into the mid to high fives, all the way up until the middle to the end of April. Now, if I had to look at the rate market and I had to define as what it has been in 2024, I would say it's been a roller coaster. You don't know from every 2 weeks to the next 2 weeks if the bond yields are up or down, and they can swing a quarter point up or down at any time. And if you don't know, this can have a direct correlation on what the actual fixed rates are. You see, when bonds are bought or sold, they impact the cost of the bond yield, and the yield itself impacts the cost of your fixed mortgage interest rate. And so we've seen that impact consumers more than anything else. And there's this consumer sentiment in Canada which is highly, highly sensitive to interest rates. It's suggesting that and my suggestion is that there are almost like key points, like below 5%, or once you put a 4 in front of it, that people really jump back into the marketplace. Well, because that hasn't happened, people haven't made decisions and they haven't moved. Now, some of the trends we've seen so far in the moving market in 2024, a lot of first-time home buyers in the early quarter. So the first quarter, we saw a lot of first-time home buyers kind of starting to table off into Q2. In Q2, we saw a substantial amount of listings. But the listings that we've been seeing, many of them have been sitting because they were priced based on markets from a year to 2 years ago. And a massive amount of those listings are actually what we would consider to be baby boomers looking to downsize and cash in. But because they were trying to make decisions based on the year before, or even 2 years ago, the house prices were high. And there are a lot of real estate agents that are okay to sit on these listings for a long time because either A, they want to attract some marketing attention, or B, in hopes the market is going to come back, or C, they just generally speaking want something to do with their time. I don't know. I think it's probably a little mix of everything. But ultimately, you can't blame anybody for looking for an opportunity and having optimism about the marketplace that just hasn't recovered. And so what we've seen all the way into the end of Q2, that would be into June of 2024, is still a large number of listings sitting in the marketplace. And what is selling, because there are properties still selling. In fact, I just pulled up a report here based on year-over-year stats compared to comparing 2023 to 2022. If we were to look specifically in British Columbia, more specifically Vancouver, from May to May, 2023 to 2024, they're still up year over year in terms of price point, 1.5%. New active listings is where things are significant. So 28% year over year increase in active listings, but sales are down month over month, negative 0.9%. So nothing significant, but it's really an interesting thing to note. Now, province by province, there are some differences because in Alberta, we're seeing a record-breaking benchmark price for the 5th consecutive month. So what we're seeing in Ontario and in some parts of BC, where BC is remaining static, Ontario is down, Alberta and New Brunswick are up. In fact, 10.6% in New Brunswick. And obviously, as we talked about in Alberta there, we're up 9.3% year over year and the average benchmark price. Now, that's nothing to scoff at. And the reality is people are still fleeing the market to get into Alberta. And there's just obviously a substantial amount of people. When does that change? It's hard to say exactly because soon enough, if this continues, the idea of moving to Alberta for cheaper house prices will eventually start to slow down and you'll see less people jumping into that market. And then it'll have to be more about the economy and what's going on economically speaking, job-wise and income-wise in Alberta than just the housing costs. And we've already started to see that actually in Calgary. A lot of our clients were moving to Calgary in 2023. We're not seeing that happen nearly as much now in 2024. Now we're seeing them move north or up to small towns. So the mass exodus from BC and Ontario to Alberta continues, but the question is really for how long, which has been a huge story of 2024 so far. Now, back to house prices. Interestingly enough, as we mentioned, between 2023 and 2024, specifically in British Columbia, not a significant difference. House prices are actually relatively flat. And the reason that we're seeing all these properties sit is because there are expectations of values to be higher. A vast majority of the properties that are sitting are the brand new condos that are being built that are studios and or one bedrooms in areas where there's a whole whackload of them coming up. People that were trying to assign these condos are now in a position right in the middle of 2024 where they're unable to assign them for the value that they paid, which was 2022 values and not 2024 values. So we'll be curious to see what the impact is on the local markets and how long it takes for that to kind of work its way into the marketplace. Which leads me to the next point about construction. So we have a lot of condos coming up and we have a lot of condos being complete and we have people unable to actually complete on these condos and unable to assign them. To assign a condo is basically sell the contract to somebody else before it's complete. So the question mark is, how does that impact building? And we've seen the amount of contracts in place, the amount of permits in place for builders decline significantly. The amount of housing starts actually decline year over year quite substantially, even while immigration is still high and the market is still needing housing more now than ever. But what's more interesting is if you actually look at the type of housing that's being built right now, we're in need of family homes, either townhomes, row homes, duplexes, fourplexes, 3 bedrooms, these types of things. But the only thing that seems to be getting built right now is 1-bedroom, 2-bedroom condos, and in many cases, studios. So the amount of single-family homes getting started is substantially lower than we've seen historically speaking. And there's a year-over-year decline in single-family homes. Unsurprisingly, that's due in large part to the fact the land is so expensive. And just recently, in June of 2024, we're actually starting to see some developers go into foreclosure or try to sell off their land or lots in places that they were planning to build. Now, in many of these situations, there are builders and developers that purchased their land in the last 2 to 3 years where they're purchasing at a premium. But that is another reason to suggest that we might not see anywhere near as many homes being built in 2026 and 2027. Now, today's episode isn't about 2026 and 27, but it really is interesting to note that. Now, A few other changes that have taken effect. We obviously know about the Canadian Charter of Rights that came into effect in 2024, which includes the capital gains tax. After $250,000 of capital gains, you now have to pay 66% on the amount above that instead of the entire amount being 50%. And if you bought your house in a corporation and you're selling your house in a corporation, that's an investment, well, you now pay 66% capital gains on the entire thing. Now, whether or not that's actually going to have any intended effect, which is to put money back into housing, no one knows, but chances are it's probably going to do more bad than good in the overall marketplace. Otherwise, the federal budget announced a couple of other changes, some being relatively weak. There's the 30-year amortization for new homes for brand new first-time homebuyers. So you have to be a first-time homebuyer to get access to the 30-year amortization, which will help people qualify for about 9% more money, and it will reduce their monthly payments. But the net effect is that it has to be a brand new building. In fact, they're paying GST and the cost of housing is actually higher anyways. So the question is, why didn't they just do this for everyone? Well, that takes effect in August of 2024. So that's coming up relatively quickly, not too far away right now. We also saw some changes in regards to zoning bylaws. Those are taking effect now in July of 2024. In many municipalities, they're actually required to allow for housing as many as 4 units per lot, in some cases 6 and 8. And I've heard stories about single family homes being completely rezoned to allow for like 10 stories or 12 stories anywhere near a SkyTrain. And so there's just so many different changes as far as zoning right now. I think it'll be curious to see how that all shakes down in the marketplace and what that does for the housing market. We've also seen the elimination of short-term rentals. Unless it's your primary residence, you can no longer have an Airbnb property that isn't your short-term residence in British Columbia. And in most places throughout the country of Canada, they're no longer allowing that. Plus, if you have an Airbnb, you can no longer use a taxable write-off if it's a short-term rental, where in a long-term rental situation, you can write off the interest and expenses related to having a rental property in your house or a basement suite rental. Continue forward, looking at 2024, the story has continued to be immigration. And what's going on with the immigration in the marketplace is that we've seen extreme highs, and it's continued. It hasn't actually stopped. Although, as recently as June of 2024, there's been a public mandate suggesting, not a public mandate, let's say it one more time. Although, as recently as 2024, National Bank says we better get used to dramatically slower population growth for the next 3 years, specifically citing the 2 areas where we will see growth will continue to be Alberta and Saskatchewan. But after a record year in 2022 and 2023, and potentially 2024, they're suggesting a population reduction in terms of immigration down to less than 50% of what we've actually seen in the last 3 years. That's still a lot of people that need a lot of homes. And at the end of the day, I'm not really sure that there's a positive light to the fact that they're reducing the immigration, other than the fact that they're probably just recognizing that we just don't simply have the place to put people. But the effect of all of this is going to take place in a couple of years' time, in 2026 and 2025 in some situations, when people's mortgages are coming up for renewal and refinance, and they're now going to be in a position where they have to either restructure or put themselves into a different type of home, or just deal with higher costs. So now the point of this episode isn't necessarily to talk about what's going to happen in 25 and 26, but many economists and many, prognosticators, many of those that are out there making predictions are saying that the year 2025 is the year that we start to see real estate really take off again, followed by 2026 really growing. And a big part of that is because there's just so many people in the marketplace that are waiting to see what happens between the immigration, that are waiting to see what happens with the interest rates, that are waiting to see what happens with the new rules, waiting for the election, all these different things to come into place. Anyways, the first half of 2024 has been crazy. Short-term rental changes in place. We talked about the new zoning bylaws coming out July 2024, the new rule announcements, the federal budget in place, the BOC, the real estate market going up and down. I can't even imagine how much more you could pack into the market in that short of time. And I'm curious how 2024, the second half, unfolds. I read an article recently that suggested that they're predicting for 2024 second half to recover, followed by a much larger recovery in early 2025 in the real estate marketplace. Now, I know there are many out there who are suggesting there's a significant decline that's going to happen, but between the fact that housing starts are declining, immigration is still high, interest rates are going to come down, despite the fact that we might be entering a recession, there is going to be pressure on house prices. The question is that, is this going to be pressure across the board in certain segments, in certain marketplaces? And if so, which cities and which areas see the biggest bumps and which ones remain the most flat? Well, I hope you enjoyed this episode here today. If you did, please give me a thumbs up. If you have some comments, some questions, or some feedback, of course, like I said, drop it in the comments in YouTube. And if you're listening on the podcast, send a share. Follow me on Instagram at the Mortgage Pug or at Flow Mortgage Co. I'll see you guys on the next one. That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.